Right, the COT report is out June 9th, and I've been staring at this thing for 2 days. I mean, take a look at this column. Every single currency is down. Not one, not two, every one of them. Now, there's talk about the SpaceX IPO possibly pulling out liquidity, and that's not my lane. However, things happened, and price must move. So my concern is, how does this affect us this week in the Forex space? Because whenever the commercials move in one direction like this, it means something for price. So let's look at it. So the new data is out, and I'm looking at the net contract for the week. Everything is down. I mean, every single currency. This is except specific things like the euro against the British pound, and then Bitcoin. Apart from these two things, every other thing was reduced by the commercial traders in total. However, there is a little bit of, should I call it, miracle happening here. When you compare the total commercial COT data against the leverage fund traders, you start to see a little bit of divergence. I mean, for a start, take a look at the Australian dollar right here. The Australian dollar for the commercial traders, and when I say commercial, I mean assets leveraged and non-reportable put together. This is their current stance on the market. They are just above the neutral mark. They have a net contract which is in the positive, but the change in their contract is drastically reduced, meaning they would have been about 62,000 contracts here if they hadn't reduced as much as they did. And then taking a look at that on the lower side, you see what the leverage fund traders are doing. They are actually heavily long in this exact same market, which is kind of like a twist of play back and forth. We can also observe a similar situation with the euro, where the change in net contract is still negative. However, the total net contract is heavily positive, around 275,000 plus. But the leverage fund traders are not going long in this market. Another market where this thing plays out is the British pound. And you can see how they are all opposing the total commercial stance. So the good thing is, COT alone is not enough to change what the market is doing, right? You still have to understand what the fundamental economic data is saying about each market. And that is a good blessing for us. So let's take a look at it pair by pair and see what we are expecting is going to happen after this shocking release. So right here on the impact table, I made a little bit of change, and it's going to be obviously useful during the week. But for now, it's weekend. However, let's focus on the real deal. The real deal here is, even with the changes to the COT reports, the leverage fund traders and everything, we still have the British pound against the US dollar standing on the neutral zone. Why is it neutral, if I should say? Well, we're seeing quite divergence and variance in the data. The total news is bearish, but the recent 14 days seems to have been coming up recently. The yield is more towards the British pound than it is for the dollar. The central bank difference, there's no difference. They're basically just flatlined against each other. The leverage funds stance is not bullish, and then the retail stance is bullish, but we should go against them. If you put all of this into one view, you would land at the same sum products. Obviously, we don't have any change because yesterday was a weekend, so there will be no changes, right? But with that in mind, we have other markets where there are changes. So let's start with the top of the top, the US dollar against the Canadian dollar. Here we have somewhat of variance, but even with that variance, I can see that everything here is above 50%, except the recent 14 days, which is saying that the data is leaning more for the Canadian dollar. So let's see what the USDCAD table, or rather chart, looks like. Now what I have here is a channel showing where price has constantly resisted around. This is an area where price has constantly found itself coming back, and this is from the monthly view on this situation. You can see how price constantly finds itself coming back into this area of price movement. Now, that is not for us to determine what's going to happen next, but on the monthly, what we can see is Price is currently in a location called a monthly supply zone. As you can see right here, this rectangle here stands for a supply zone. Now, on the weekly time frame, the most recent, we can see how the zones are being negated. You can see a zone right here, supply zone, another supply zone here, and they are both being negated heavily. Price is even creating new demand zones as it moves. As you can see, this is a weekly supply demand zone right here. We also have another one right here. You can see how we've had multiple, not one, not two, but multiple weeks of run up from price. Price just keeps going to the upside over and over and over again. You can see going up, going up, going up. So is there a retracement we can trade with if the market is in such strong demand? Well, let's check out the daily and see if we do have such situation. Now, on the daily, what we notice is the zone around here has been completely nullified as price has finally closed well above it. There is a tendency for price to return back to some zones, but the only zones we can see here on the daily are this zone. You can see this is the first daily zone, making this area a very tight area of review. We also have another daily zone, but it has been utilized, very, very well utilized. It was utilized within 3 days, as you can see right here. Well utilized right here by this candle. So it is no longer valid for us. We also have another unmitigated daily zone, but this second one is so far below that I would say we should look at that zone with a little bit of it may not come to that point kind of a thing, right? It may not come to that point kind of a thing. Now, what am I looking for personally? Once I get to the daily view, what am I looking for as a trader in supply and demand? Well, supply and demand is all about trying to make sure that the momentum continues in one direction. If there are enough buyers in the market that came in at this position, they will most likely come back or join in to make this market move even further at that same area. So what does this mean? On the daily, or rather on the 1 hour, what I'm looking for is it's basically a waiting for price to do whatever it does to come down into this zone. And if we can find that 1 hour break of supply zones, then we'll want to trade to the upside. That is the way we're going to trade it. However, there's one small problem, right? There's one small problem. Don't forget, on the monthly, I saw heavy, don't forget, heavy supply here. So what does this mean? It means if I start finding daily, you can see on the monthly, this was so clean. Price has gone into this zone at least once. You see it come into the zone once and was quickly rejected. But price is coming back into the zone again. And it didn't go deep the first time. So now this zone is only available from here. This is where the monthly zone is available for. So what do I want to see if this zone is going to work? Well, the only thing I can see happening if the zone is going to, remember that's the condition, if it is going to function, the only thing I can see is price may reject and push to the downside before any other thing. If I start to see that 1 hour rejection inside here, then I'll want to buy. But for now, I don't want to buy on this market. I just want to wait for the market to show whatever signs it needs to show in the forthcoming days or in a week or two. In the next week, it should do whatever it needs to do. And we will see either that push to the downside, or we may see a heavy push, or we may even see a continuation slow grind upwards. Moving on, we're going to look at the Swiss franc, the US dollar against the Swiss franc. This is another bullish market I have here. I have good data. I have good fundamental data in the recent 14 days, even better, showing that the strength is still ongoing for the US dollar than the Swiss franc. The technical data is severely pushing upwards, heavily pushing upwards. We have good central bank rate differentials. We even have positive yield for this market to the dollar side. Leverage funds and going against the retail traders. Matter of fact, this looks more attractive to me than this. It looks way more attractive to me than the other one. Why? Because in this case, we are not having recent 14 days confusion. So let's see what it is looking like on the chart. We have the US dollar Swiss franc. As you can see right here, I do have a wait position. As you can see, I am waiting for somewhere around here or even anywhere within the daily zone. But just so you guys can see clearly what is going on here, the boxes are showing you the daily zone. As you can see, this is a daily demand zone right here. This area right here, as you can see. So this is a daily demand zone. And before this, we also had a weekly demand zone, which price, as you can see, price is price just the week ended last week. So this created a very strong daily supplies demand zone. We have a daily supply zone up here, but it has been utilized. As you can see, this price movement inside it is utilization, right? So what am I waiting for in this market? Well, I am waiting for something similar to what we were waiting for in the US dollar, Canadian dollar. We're waiting for price to slowly show or going to the downside into the demand zones or just below the demand zone, and then shows the sign for an up move. And we'll take a buy trade following this market to the upside as long as fundamental keeps sticking bullish. Then we have the US dollar Japanese yen. This is the market where I have always been careful. I can see that the recent some product dropped by 1%, 1.7%. That's definitely coming from technical data, because the place I pull technical data from is able to collect technical data during the weekend too. So that may be coming from technical data, the daily technical position. Maybe it dropped a little bit from 80, 70 or so down a little bit. And that led to a little bit of loss in the sum product compared to yesterday. However, this market has every signs of going bullish. Every single sign. Strong data, strong yield, strong currency, central bank difference, slightly good leverage fund stance, and major bearish retail stance, meaning I should be going long here. But then again, you all know USDJPY and me. It's somewhere where I am being as careful as possible. And I think one of the reasons a lot of retail traders are beginning to short this market is they saw this bearish candle this day on this so on Thursday. They saw this sell-off on Thursday, and they all think they are thinking with the same FOMO I'm thinking, right? These drops may be coming again. And I feel that way too, but I don't want to trade this market. Like I said, I don't want to even trade this market. I'm seeing so many opportunities to come in. I can see daily demand zones, lots and lots of daily opportunities to come in. But then again, this market is at the point where it's called turning points, at the point where it can just change instantly in days. You can see how just 1 day candle looks like when it falls from these locations. You see when it falls, you see 3 days in a row. You can see 1 day candles. See how far they tend to run whenever that fall starts. You see it here. It's obvious. It has happened so many times. You see, the fall is always sharp and sudden, more like catching a dropping knife. Moving on, we have the New Zealand dollar against the US dollar. Now, this is flipping the side, right? Because the US dollar is now the quote currency. It's now the base, the quote currency. So, but what I can see here clearly is that the US dollar still has like the best strength compared to all of them. And what this means is we're still bearish in the New Zealand dollar against the US dollar. However, the recent changes is quite bullish. Probably, I think it's still the same thing from the neutral, from the what is it called? The daily technical direction of the market. But let's check out and see New Zealand dollar against the US dollar. And we're going to dive straight to the front. Let's see. We have a weekly demand zone, and price is seriously coming down to daily demand zone. And there's a higher tendency, I feel personally, right? This is not financial advice again, as usual. I personally feel price is going to cut through these demand zones I have here. Seriously going to cut through it like a hot knife cutting through butter, right? But you can also see something else I have here. There's another small problem I have here. I am not seeing price. I cannot see price returning to supply zones. You see how it's not giving us that chance to come into this market. There are no returns to supply zones, and that is a strong indication of heavy selling ongoing, very heavy sales ongoing. However, it is also an indication of this is not a market where you can trade yet. Because if you go down to the 4 hours and to 1 hours, you don't even have an opportunity because price is not even coming into the zone. If price moves up for us somewhere into this 1.0.586, 0.585, or is able to finally drop up or go up to the 0.591 zones, then it will be a very good selling opportunity to capture a good move to the downside rather than this first zone at 0.586 levels, which is going to give us not really a bad move, but way smaller than the other one, right? Let's see, for the euro US dollar, we are still bearish. We are more bearish on the euro US dollar than the New Zealand US dollar. And as you can see, everything on this place is below 40. Every single data coming out is below 40. When you put that into perspective, let's see what that looks like on the chart. Well, this is where we have miracles happening, right? On the daily, we have similar scenario with the New Zealand. However, we had very tiny opportunities to come into the market. As you can see, price came back to retest. It didn't even give us a full day chance. It just gave us part of a day chance, ran out of it. So we may be seeing similar situations in the coming days. We might not have like full day chance, or we might have like 1 or 2 days chances before we continue to the downside. That is what I personally see in the euro against the US dollar. If you go up into the 4 hours, the zones I'm looking out for is, you can see price is already mitigating with the 4-hour zones. It's not yet into the daily zone, but it's already seriously mitigating with the 4-hour zone. And we may see that price move in and drop down immediately. Or price may even already be inside here because it's weekend, right? Price may already be inside here. And what we'll just wake up to see is price already capitulating to the downside. We don't know yet, right? We don't know. We're just watching. For the Australian dollar, we've had no major moves in the recent days. Now, the variance in the data is something I don't really like. Why? Well, I can't be having an overall data of 41%, but in the recent 14 days, it looks like it's now falling more for the Australian dollar than the US dollar. And the yield is also positive. The central bank difference is also more for the Australian dollar. Now, this is a market where I think I'll just I'll sit on my hands a little bit because I don't want to be the one in the position where the market is going to play with us. But let's check out what the chart is looking at, right? Let's check out what the chart is looking like. So on the weekly, we have, now this is the funny thing. On the weekly, I would say we have a change of character to both sides on the, okay, on the weekly, we have price coming into a weekly demand zone. As you can see, this whole area is a weekly demand zone. Everything here is showing chance of bullish move to the upside on the weekly, which makes it quite scary. Why do I say it makes it quite scary? We have a bearish trend, a bearish market to observe for, yet we are having weekly demand right there, right underneath us. What this means is we're waiting for change of character to the downside on the weekly. We're waiting for price to break through all of this first and then come back before we can confirm that is what's trading for the weekly traders, right? But on the daily, this is where it gets very tricky, right? I'm going to put up an indicator for you to see something. This indicator is called a change of character indicator, and you can see why I personally am scared of this market right now. I have a change of character to the upside. Just immediately that change of character, I now have another change of character to the downside. So what does this mean? A bullish change of character followed by a bearish change of character. I'm caught within a range. That is what I'm saying. I am caught within a range, and this whole area to me is a range that I should I say, be careful of. Why should I be careful of it? Now my chart looks a lot confusing, but let me just let's put all of these other drawings here in the dustbin a little bit. Not really in the dustbin, but more like somewhere where it doesn't distract us. Good, this is fine. Now, I want you to pay attention to this, right? Pay attention to this. The economic data calculation is saying I should go bearish. However, this is where it gets tricky, right? If I'm to go bearish, where do I come into this market for a bearish run? Mind you, like I said, the entire range of this price move, this whole range here, is where there is confusion. If I want to sell, I'm supposed to start selling from areas like this, this, and this. You can see these three areas. These are places I should sell from. But these areas are also interlining with areas like this, which are buying zones for people who are buying. Now, as you can see, retail is going heavily long. So I'm supposed to go against them by going short. But the market is going to have to actually move in the long direction first. You can see it has to actually go up first and possibly trap them at this position before it goes down. If trapping the retail traders is what's happening, right? It's going to have to go like this, or even all the way down up here before it starts to go down. If trapping the retail traders is what's happening in the market. However, I sincerely doubt that is what is happening in this market. Why do I say so? Well, it's because this range is quite confusing right now. And the only way I can trade this is to trade on the lower time frame, such as the 4 hours and the 1 hour time frame. This is where I can see opportunities to understand fully well what is happening in this market. But whatever I am doing, I'm going to be trading small chunks, if I'm going to be trading anyway, but I'm supposed to be trading small chunks, very, very small chunks, until everything is settled. That is it when it comes to all of the Australian dollar. But I don't have a perspective on this market, honestly speaking. It is absolutely confusing right now. So there's one last caveat I want to show you at the end of this video. This is something that I'm keeping for viewers who stay to the end. It's my trading journal, my personal trading account and a portfolio. So you're going to watch me log into a third-party broker, a third-party journaling app. This is called Trader Waves. You can see the link to join this app or website with my what is it called? The link below in the description, right? There's a referral link. Don't worry, I don't really gain anything unless you pay for the pro. So if you pay, thank you. It's going to give me a little bit of donation. I think I'll accumulate it towards getting my own pro. Well, this is why am I showing you my trading journal? Well, this is just to say or show my transparency in the market. This is what I have been doing, and this is how long it's been going. We're going to start with the metrics. The metrics shows that I am currently up $53. Yee, that's a lot, right? The account started at $50, don't forget, and I'm up $53. So I'm up 107% gain. That is risky. That is risky. I didn't make this money overnight, don't forget. It's been about 3 months or so. But this is everything I have been doing with this account, trading it. Let's go to the calendar where it's going to be far more easier to explain everything about this account. So October of last year, as you can see, I didn't take any trades. But what you can see here is down here, you can see my yearly performance. This is November. In the month of November, I made 1 trade. I think I short Bitcoin that day and I closed it up immediately when I gained about 9 cents. It was 7 minutes of trading, and that was the last time I stopped. I waited all the way till March of 2025. So let's say, sorry, March of 2026. Did I say 2025? 2026. And you can see this is my status. I started with heavy duty tiers. -$2, -$2, made it $9 in profit, -$3, then $13. So I was testing different strategy at the point in time, multiple different strategies. And you can see some days were bad, some days were good, but all in all, we still ended positive the second month at 25.4% gain. And then the third month, May, that was last month, we did everything and we ended still in a positive of 8%. And then this month, which we've been trading, we've made some, we've lost some, but currently we're still up a little bit. And we'll see how it goes. But this is my account. I have a 50% win rate with everything I have done. Now, mind you, it's not one strategy, so 50% win rate is like a miracle to me, being that I am mixing up different strategies at the same time and I'm still at 50%. But the average win to lose is something else, right? My average winning days compared to my average losing days, you can see how far away from each other they are. My net PNL, net daily PNL is changing. Some days is up, some days is bad, but it's all good. It's all good, it's all good, it's all good. And this is everything about my personal account as of right now. And I hope to continue becoming better. My journal is right here. You can see every single trades I have taken. It's plus, minus, lots and plus, minus, but there are over, I think, 80 trades now in total recorded in this account. And I'm still taking more trades every day. But one thing I've started doing more often is I have started trading much more strength divergence, and it did something absolutely amazing on this second trade, made me major profit. It's very small losses, as you can see, very small loss. So it looks like it's a scalping trade, but it's something that I really enjoy, and I will teach you guys on this channel when I have fully gained confidence in it. Until then, thank you all for watching, and I hope you enjoyed the video. Also learned something from it, because I'm more focused on making sure the video is not just about myself, it's about people learning something from it. I hope you learned something from the video. See you guys in the next one. Peace.